Welcome to Lithium-ion Rock, Season 1, Episode 9. Pilbara Minerals, who can it be now? Piedmont Lithium, born to run. The focus of this episode is Pilbara Minerals and Ken Brinsden interviewed, followed by a hard rock comparable, Piedmont Lithium, and we interview CEO Keith Phillips and General Manager Patrick Brindle. As we've discussed before, Rodney visited Piedmont earlier this year and interviewed a lot of the members of the staff and walked around the ground in the core shack. He wrote an extensive note, which is posted on our website, www.libull.com. I'd encourage you to read it there or visit LinkedIn, Rodney at LinkedIn, or on Twitter at Rodney Hooper 13. The Ken Brinsden interview is actually part 2 of what will now be a 3-part interview. So next podcast, we will have the final segment with Ken. Today's segment will be largely focused on all the operational questions and a question on Ken's thoughts on spodumene prices. I've called Australian hard rock crocodile rock. And I've said that I've not actually given Ken Brinsden a nickname, or Pilbara a nickname for that matter, ever. I'm thinking maybe we'll call Ken Crocodile Dundee. Ken has called Pilgangoora a gigamine. I like that term. But I usually give deposits names of women. For example, Wagner was Jimi Hendrix's Foxy Lady. Crocodile Dundee's girlfriend's name was Sue, or Susie. Pilgangoora, Crocodile Rock, is Susie. Ken has assembled the bluest chip partners, Ganfeng, General Lithium, Great Wall, an auto company of China. That was huge news. It was the first of its type. Will Volkswagen do the same? Why wouldn't they do the same? I'm still shocked at a lot of the information that was contained within that Volkswagen MOU, a partnership with Ganfeng, a partnership that covers solid-state R&D and recycling. So it's a meaningful prospective partnership. It's an MOU. I'm taking it as a given, but there are some people we've spoken to in Europe one of which said that, Volkswagen's just flapping their gums. So, we'll see. But again, they said a lot in there about hard rock. They said a lot about Australia. So when they were talking about Ganfeng, they were talking about Ganfeng's hard rock partners, of which Pilbara is very significant, as is Mineral Resources at Mount Marion, and to a lesser extent, but new, with Altura. So there's a lot going on there, and Volkswagen will be feeding or fed by Pilgangoora, perhaps, specifically, over time. Might VW be interested in, 20 to 49% of the Pilgangoora mine? A shout out to a sell-side analyst I have a great deal of respect for, Stuart McIntyre at Blue Ocean Equities in Australia, who put out a note on Pilbara talking about a potentially accretive deal by mid-year this year. And he has a target price of $1.20, and he has a strategic target of $1.70. He speculates who might want to partner with Pilbara as Mineral Resources 1, Livent 2, and Wesfarmers 3. Wesfarmers has been in the news bidding for the rare earths company Lynas, so they're a group that no one was talking about and is one we should look at. And then he thought maybe some of Pilbara's existing partners, Ganfeng, POSCO, Great Wall. It seems unlikely that Tangshi, SQM, or Albemarle would do it, although he said it's possible. He also suggested maybe some battery majors, CATL, LG Chem, Samsung. That would be groundbreaking. And then the automakers, as we were talking about earlier, potentially Volkswagen. So the thrilla in the Pilbara. The partnering process aside, just looking at the financial model, assuming a $600 spodumene price over time, and if Pilbara executes on their stage 1 and stage 2 plans, they should be generating some 300 million US in EBITDA by 2021, according to this note. That would put them on a 3 times 2021 EBITDA, although 9 times 2020 as they're ramping up. But that's a undemanding multiple if Pilbara is to execute well on their growth plans. Stewart's assumed Pilbara will have 55% operating margins during that period through 2022. A further shout out to Reg Spencer and Larry Hill at Canaccord Genuity, who wrote a note about Pilbara saying, Stage 3, who can it be now? Now, it looks like the Lithium-ion rocks stole that title. We did not. I thought about it before. Just so happens that, like often, Reg and Larry and the Canaccord team and I are on the same wavelength. Unlike Stuart McIntyre, however, Reg and Larry downgraded Pilbara's stock and have a target price of only 80 cents. This was in connection with their broader note on the entire lithium sector, where they attempted to forecast prices, and they did so with very significant specificity, despite highlighting how difficult it is to, and how many different factors go into a particular pricing forecast. But the crux of their argument is that there are a lot of spodumene projects that are producing spodumene, and there's not enough conversion capacity in China. And therefore, there's going to be an oversupply of spodumene, and therefore that is going to be bad news for Pilbara and other spodumene-only producers. I don't fully agree with those price forecasts. And more importantly, I think there's a quality differential. And I believe that Pilbara, the quality of Pilbara's ore, and also the importance of their collaborative relationships with their partners, meaning their partners need to know that Pilbara needs to make a reasonable margin, will ensure that Pilbara gets a good price for their SC6. On the other hand, I very much agree, and Canaccord covers the other company of this podcast, Piedmont Lithium, and if you look at all of the companies in their coverage universe, Canaccord's target price of 30 cents for Piedmont is the most upside of any company in their coverage. The Volkswagen article, of last week has real legs, and the Reuters article talking about the U.S. getting its act together, that also has legs. So this event, apparently, in a Benchmark Minerals event in D.C. has mushroomed into something, very significant with very high-profile speakers. I hear Paul Graves at Livent is speaking, someone from Tesla, and perhaps someone from ALB as well. James Calloway of Ioneer, the largest market cap development story in America, and a person with some experience of having built a producing lithium mine in Orocobre. China and non-China, us and them, playing out in Washington, D.C., a new House of Cards lithium narrative. For much of the next number of weeks, expect there to be a fair bit of noise and positive noise in relation to that. So it's a good timing, actually, to speak about the Piedmont Lithium, which is a story we've talked about, written about, but it's kind of like Western Australia, in the United States, in my opinion. Piedmont trades on the Nasdaq ticker symbol PLL and also on the ASX with the same ticker PLL. It's about a 75-80 million US market cap. And Pilbara trades on the OTC ticker symbol PILBF and also on the ASX PLS. Pilbara is in production and has about a US 1 billion market cap. We are privileged here to have Ken Brinsden, the CEO of Pilbara Minerals, who's taken some time out of his exceptionally busy schedule with massive news flow since the beginning of the year to just list it a little bit. Announced in January a 40,000 ton MOU with POSCO, and then further progress on that with a May kind of decision date on prospectively going forward on that. A stage 3 scoping study came out, as well as finalizing the Ganfeng 50 million Aussie investment, and then an announcement of commercial production commencement, and also the appointment of Macquarie for a partnering process of between 20 and 49% in the Pilgangoora mine. In that press release, Ken, you mentioned that you had inquiries from lithium processors, battery manufacturers, trading companies, mining companies, and automakers. I was curious to see, there's no oil companies in that mix, but as a first question in this partnering process, what would be an ideal partner from Pilbara, for Pilbara, in your estimation?
Yeah, well, thanks for the chance to participate, Howard, and Rodney, nice to be with you. So our objective in launching, or formally launching the partnering process, is really to interconnect the future offtake that's available from our Stage 3 project to anticipated chemical facilities where we can continue to build out an economic interest in the downstream chemical conversion. And we'd note that as people look to secure offtake, a question that often gets asked is, well, how do we participate in that offtake, and is there the option to co-invest in the mine? So the three, in our view, are sort of inextricably linked. There is more vertical integration occurring, the quality of the product or products in the supply chain. And one of the ways that both of those objectives can be achieved is with deeper levels of vertical integration. And that's coincident with one of our strategic objectives. We really like the quality in the Pilgangoora spodumene. We believe our customers feel the same way, and we'd like to leverage that into the value-added chemicals, in particular, battery-ready lithium hydroxide and carbonate. So that's the background by which we're considering the process. And to your question, Howard, well, what does a partner look like? Well, there's several things in that, and I'm not sure it's easy to provide sort of any one answer. I know that there is people with chemical expertise downstream who are looking to secure more raw material supply. I like the idea that we could work with a partner who comes with that chemical expertise, and that they value our resource in the ground.
Okay, great. And like I said, you appointed Macquarie, who ran a very effective process, it seems, at Wodgina for Mineral Resources, getting a pretty good price. I've commented about that. So we'll see what the landscape looks like, over the next, I think, mid-year. You said you would decide on the outcome?
Yeah, that's right. So we've been working on this process for quite a while, pre the formal launch. Do a certain amount of work to get ready for the process, being able to demonstrate a path through to the mine's expansion with the scoping study, some consideration around what chemical facilities could look like and the scale and potential location of those facilities. And then, of course, establishing a data room so that people can assess the opportunity. The team's been working really hard on that stuff for quite some period of time. And then, coincident with the formal launch, well, that's really the process that Pilbara Minerals has to go through is to, in effect, cleanse the market, and we've been placing shares to Ganfeng. So clearly, the process that we're considering is part of that cleansing, as is other important initiatives that are occurring in the company, things like the POSCO progress of the POSCO relationship, the progress of production at a site level, commercial production's another important objective and outcome now. It's imperative that we get the market cleansed so that we can continue to progress what's now, in effect, a closed process for the purpose of partnering. We can't really say too much more about it now, other than to say that there's a process underway, and we hope to achieve useful aims for the future growth of the company.
And a lot of listeners and ourselves would be interested to know, and you're closer to this market than most, is where is conversion capacity in China relative to the spodumene production that's happening in the market?
Yeah, it's a good question, and I think people want to sort of immediately migrate to the sort of very broad question about, is there sufficient chemical conversion capacity in relation to the spodumene supply? And broadly speaking, I think that is, and/or there is a lot of chemical conversion capacity that's been commissioned in the last sort of 6 to 9 months, and/or is commissioning now, or will be done this year. So I'm not overly concerned about the balance of spodumene versus chemical conversion capacity. I think a much more interesting question is how much of that chemical conversion capacity makes battery-ready products. And the answer there is nowhere near so obvious. It's much more nuanced. And I think the answer is that a reasonable chunk of that new chemical conversion capacity won't make battery-ready products, at least not in the short term. And as such, the battery-ready product is still strong demand. And you can see that, we see that as a function of our customers who are core suppliers to the battery industry in China, especially Ganfeng and General Lithium. They're renowned as being stable and high-quality suppliers now, not only to the China market, but also to Japan and Korea. That tells you something about the quality that they produce, and the fact that their product is still in demand. So we remain reasonably comfortable about, where as long as your spodumene product is placed with the right counterparties, you don't have any particular reason to be concerned about the consumption of your spodumene.
And I guess that's also key in the sense that, which spodumene concentrate translates into battery grade. Is it a combination of the material and the offtake part?
It is, absolutely. And when you're qualified for the big, sophisticated battery players, that's in China or in fact the Japanese and Korean markets, your qualification is crucial and a key piece of the value that you represent to the market. So typically you're not going to compromise that, and that's why the consumption of a high quality spodumene concentrate is going to be one of the value propositions that you can place in the market for your customer base, the likes of the Shanshans and Beijing East Springs and now Panasonics and LG Chem. So harking back to the comments I made at the beginning of the call, the nature of the supply chain and the extent to which you're vertically integrated by, whether it's by relationship, by offtake or by ownership, is an important part of the value position that you make to the market in the lithium raw material supply chain. And I'd like to think that Pilbara Minerals has done a really good job in that regard, and we have the premier customer group.
Yes, it certainly looks that way. And Ken, just in answering around that sort of theme. You know, I often hear market chatter and people talk about the iron content of the spodumene material that comes from the Pilgangoora district, etc. But to my mind, you know, you've got a great product, as does your neighbor Altura. Can you just enlighten us on Pilbara's position regarding iron content?
Oh man, this whole debate, I felt at different points it's comical. You know, you get people kind of associate because we're in the Pilbara, one of the world's great iron ore provinces. You know, there must be heaps of iron in your spodumene concentrate. And look, the reality is nothing could be further from the truth. The chemical conversion industry is typically going to be looking for product, broadly speaking, sort of sub 2% iron, but specifically in our case, depending on the customer, it's either 1.4% iron or less or 1.8% iron or less. But in any case, what we actually deliver on a ship is still well below typically 1.4%. So I don't think anyone has any particular need to be concerned with respect to the iron content. In fact, I'd go one step further and say, well, Pilgangoora, Pilbara Minerals Pilgangoora is one of the few locations globally that can deliver ultra-low iron spodumene concentrate for technical grade markets, for the high-end glass and ceramics industries. Think Gorilla Glass, for example. On your high-end iPhone. That's all typically underwritten by technical grade spodumene, and there's literally only a few places around the world where you can do it, and Pilgangoora is one of them. So we're very much looking to being able to participate in that market over time, and I think that's really the proof, if you like, that you don't have any particular cause for concern about iron in our product. It's just a question of which parts of the ore body and or the extent to which you're thinking about chemical grade markets versus technical grade markets.
Okay, great. That's good to hear, and that's certainly what seems out there. So hopefully that'll be the end of that debate. In your latest announcement, you talk about the blending of coarse and fine materials to meet customer specifications. What's the split between coarse and fines, and is there a material difference in the grades between the two? Another good question, Rodney. So we work on the premise that on average we're achieving about 30 to 35% of the product in the coarse category, the balance being fines, so 65 to 70%. And there is really no material difference in the grade delivered in each category. Generally, 6% in coarse, 6% lithia in coarse product, and 6% lithia in fines. And if I took that question one step further, Rodney, I'd also say it's really important that the customer, the investor, understand where the grade is coming from. And again, I think this is one of the value propositions that Pilbara Minerals brings to the table. We are not having any really material issue in delivering 6% in fines product. And if ever there's a location where you have a balance between recovered lithium in spodumene versus grade, it's in the fine circuit. And I just want to reassure you and your listeners, when we quote our recovered products, we're obviously talking about all lithia and the fact that it's at 6%, which we would consider to be the benchmark in the chemical grade market. You can't disassociate the two, because the reality is if you dial down the grade, inevitably you will a higher recovery. So whenever people discuss recoveries, it cannot be discussed in isolation of the grade. The two are inextricably linked. You cannot avoid the discussion about grade versus the discussion about recovery. But just want to, as I said, reassure you and your listeners that
that we quote both. We're quoting a benchmark 6% product. It's actually 6% on a ship, it's 6% in fines, it's 6% in coarse, and here's the associated recovery.
Okay, excellent, because that is my next question. You did, your feed rate and production quality seem to be on track, and the issue is currently in recovery rate. So if you can just talk a little bit about that, and it looks as if you've fixed what's needed to be done there.
Yeah, that's right, Rodney. So we would have said end of December, early January that we're well on track to achieve our targeted aims around design recovery. It does take some time to optimise the plant, so we've made no secret of the fact that that's quite a long process. But we hit some speed humps during the March quarter, and they relate to issues in the plant that are really quite difficult to diagnose in the first instance. That's why I say they're a source of frustration, because in effect, we're still learning about some key aspects of the plant's operations. So the two areas of concern during the March quarter, where you have an impact in recovered product and ultimately produced spodumene concentrate, was one in the HMF circuit and the effect of ferrosilicate there, and the other was a failing liner and distribution box that impacted the flotation recovery. So the two issues are difficult to diagnose because you can't physically see them, but nonetheless, over time, once we were able to investigate much deeper, we found the challenges and readily resolved them to in effect get the recoveries back on track. So the statements that we've made about recovery basically reflect that, and the fact that we have an expectation that we will continue to work towards the design criteria. We have no reservations about our ability to get there. It's just going to take a bit more time, and our confidence comes from the fact that we're testing all of the ore, all of the water, all of the reagent mixes that we use in parallel to the physical production in the plant, and in parallel in the lab we achieve the design recoveries. So our expectation is that we will continue to keep tuning the plant and ultimately achieve the same physical aim in the big facility as we do, at a lab and a pilot scale.
That's great. And as a last question from me, Ken, the $1 million question is your thoughts on SC6 prices going forward?
Yeah, well, the spodumene price has been under pressure, as a function of this sort of steep decline in pricing for lithium chemicals in China, principally during the course of last year. I think the reality is now that the price has started to stabilise. In fact, there's been a little bit of an uptick during the course of the last couple of weeks, and I think that is probably going to be reflected in more stability in spodumene price, which has obviously been coming down. Now, unfortunately, there is a bit of lag in spodumene markets as compared to the headline chemical price in domestic markets in China, which implies that there potentially is a little bit more to come out of spodumene pricing in the current period, and maybe a little bit more in the June period, current period being the March quarter just gone, and now in the June period. But you'd like to think that represents the bulk of the movement in spodumene pricing. I think our customers have a mood of optimism because they're not seeing a material demand shift. If you're creating battery-ready products, and it's known by the battery industry, your product is in demand, and we can see that with another point of evidence is the increasing export capacity to Japan and Korea that's coming out of China, and I think that's also supported price in China because I'd be surprised if the Japanese or the Koreans really wanted to see that export capacity fall out of the market once they get used to the quality and stability of that hard rock supply base, in addition to their existing brine supply base. I'd be surprised if they were keen to see that fall out of the market. So I think that's probably supportive to stability in pricing, and the end result should be that it's in some way reflects stability in spodumene pricing.
As a first question, Keith, Piedmont's about to release an upgraded resource. There's been some excellent drill results from the central property. Is there further opportunity to acquire land, drill, and expand the resource to a strategic size, something in the sort of 40 to 50 million ton range?
Rodney, thanks for that question. I would say absolutely. This is a large belt identified by the U.S. Geological Survey as kind of 30-mile long belt, about a mile wide, with vast potential. They had actually identified in a report they published in the 1970s about 750 million tons of potential. So there's vast potential on the belt. The land in this part of the world is privately owned. There are many landowners on the belt. So it's a time-consuming process to build a bigger land package. We're committed to doing that. We think the project will get bigger and bigger. Having said that, with our current land package and our current drill campaign, we're hopeful that the project will achieve what I would characterize as a strategic size by this summer. We're not exactly sure where things will end up. We have a lot of drilling still ongoing, assay results still to come. So we have no new estimate currently on where we'll end up. But we've always had in mind that if we could have 20,000 tons a year of hydroxide for 20 plus years, that would be very strategic. Our sense in conversations with other people in the industry, from lithium companies to other mining companies to OEMs, is they seem to agree with that number. So while bigger is certainly better in some respects, this is a highly strategic project, particularly given its location at the size we hope to get to this summer.
Patrick, you've had great results recently with your drilling. Can you tell us a bit about how much available land is left under the existing tenements and what sort of availability there is for further land outside of it that looks prospective?
Well, Rodney, that's a great question. I think that land and control of properties within the tin spodumene belt is probably one of the most important aspects of the Piedmont Lithium project. Some of your listeners may not realize that our properties are entirely private lands. And so the land arrangements that we have with our neighbors and the property owners that host us are entirely private contracts. We don't have any engagement with the state or federal government with respect to the rights to prospect for lithium resources. Now, currently, our land package is about just over 1,800 acres, and of that, we've explored within the core property in the range of 500 acres. We've done a very limited amount of exploration at our Sunnyside property. And of course, as you mentioned, our best drill intercept to date was recently announced from our central property. That's about 1.5 kilometers south of core. And again, there, we probably explored a limited amount of the area which is under our control. And so probably more than half of the 1,800 acres that we have under contract remains unexplored. We have numerous drill targets that are kind of out in the future. We're currently focused in exploration on our core. And of course, we're excited to continue drilling on Central. We've got some good news coming out in the coming weeks and months on both properties. With respect to the belt overall, I think there are many thousands of prospective acres which remain unexplored and uncontracted, and really the ability of the Piedmont Lithium project to grow over time is only limited by the rate at which we are able to contract with private landowners for exploration rights.
Okay, great. And if you look at grade for a moment, you've got Kings Mountain, the Albemarle's old mine, 1.8 to 2%. Your central property drill results are similar. There've been some excellent numbers you've released. So is there any reason why Piedmont shouldn't keep finding high-grade pegmatites outside the core property?
Yeah, I guess the answer is we think they probably exist. This is the geology here is got to do the work. I wouldn't say it's particularly hard, but most of the land we obviously don't control. There could very well be swarms of big, thick pegmatites at ultra-high grade on this belt somewhere. We're looking to get more land to have a shot at finding those. We're very happy with what we have now, which we think feels a lot more like what we believe was mined at the Holman Beam property, 2 miles south of our core property, about a mile and a half south of our central property, which was high grade. It was not as high grade as Kings Mountain in our understanding, but it was a 43-year mine life and very successful operation. So that's what we're focused on now. And, we, to the extent we find something even bigger and better, that would be a terrific outcome.
Okay, great. And in terms of your latest drill results from Central, which were excellent, I see there's a surface outcropping and therefore early cash flows could come from that. Do you think that the mine plan could potentially change away from the core property to start?
That's a very interesting question. I'll preface my response by saying that for the federal permit application that we submitted in December 2018 for the core property, we completed just over 12 months of background studies, studies for the delineation of streams and wetlands, detailed cultural resources survey, threatened and endangered species survey, ground and surface water quality monitoring. And so to make a material change to the plan, let's say to move the mine plan to Central to start, the fantastic results that we announced in March notwithstanding, would really set us back into a cycle that has 12 months of pre-permit study followed by a permit application. So I would expect us to go ahead and complete the permit process on the core property. But permitting is like a conveyor belt that sort of runs out in front of operations. And so I would expect that, with a successful conclusion to our initial permits that, we would be seeking to permit other areas of the belt shortly thereafter. And then, what the mining sequence looks like over time will be adjusted as the properties under control grow and the resource overall grows.
And recently, you are expanding further on some metallurgical test work that was done before, and the latest iteration is going to include a DMS alternative. What are you hoping to see from these from the test work?
Good question. So we are running a pre-feasibility level test work program with SGS Canada at their Lakefield, Ontario lab. I'm really looking for two principal objectives through the course of that program. As you mentioned, firstly, we are doing a series of dense medium separation DMS evaluations, both on variable and composite samples, and really what we would like to see with those data in hand, as well as a technical and economic analysis completed by Primero Group, our engineering consultant. We hope to understand whether it makes sense for the project to add a dense medium circuit into our flow sheet in the next round of technical study. The data that we have received to date looks promising, but much more work is required before we can reach that conclusion. Secondly, I think we want to have a robust process design once we advance into feasibility study and ultimately into design and construction of our concentrator. And so this round of test work includes 10 variability samples across our ore body, early, middle, late years of production, fresh rock samples, as well as oxidized and near surface samples. And we'd just like to see first confirmatory results matching the test work that we completed last year, but then expanding beyond that, a look into what the performance of the ore body might be in some, let's say, less than ideal fresh rock conditions.
That's great. And with all that we're seeing with Senate hearings, etc., do you think that the U.S. will have an integrated supply chain for EVs by the time that Piedmont gets to build its chemical plant?
I do. Our current plan calls for us to initially produce a concentrate, which we'll sell probably to Asia for a year or two to build up cash and cash flow, really de-bottleneck and de-risk that part of the business before we build and finance the chemical plant. But I think the supply chain, I believe, will develop very rapidly. We've already seen SK Innovation, a major Korean company, come to the U.S. They had a groundbreaking last week on a $1.7 billion chemical plant, battery plant in Georgia, not too far away from where we are. Daimler is similarly building a large battery plant in Alabama, also in the southeastern U.S. I think you'll undoubtedly see other battery plants built in the U.S. in scale, and I think you'll see the suppliers to those battery plants moving and building capacity in the U.S. And these are things that can happen fairly quickly, certainly over a few-year process. So we expect that will happen. We have had some conversations with OEMs who are similarly optimistic about that. Car companies like to have their suppliers near and close to their car plants where possible. I think for sure we think car companies would like to have the supply chain near them. That means there'll be a large supply chain in Asia as there is now. One will probably develop in Europe as there's talk, but I think one will certainly grow in the southeastern U.S. As well.
Right, and just as you've had a distinguished investment banking career, yet here you are in a microcap stock, so you must be bullish on both Piedmont and lithium.
Yeah, I am. I am. And I'll say I spent, of my 30-year investment banking career, I spent the last decade working with junior and intermediate mining companies, mostly in Canada, bringing them into the U.S. capital market. And every now and then you see a company that has the right set of assets, sector, and management, and can achieve really spectacular things from a valuation perspective. So that's what attracted me here. I think I'm very bullish on lithium. It's increasingly clear, VW, the biggest car company in the world, put out some announcements last week. It's increasingly clear that lithium-ion is the future for EVs, and that is a technology everyone will adopt in scale. I think demand for electric vehicles will be exceedingly strong. I think demand thus for lithium will be very, very strong. I think the likelihood of the projects people are talking about all coming online on stream smoothly is very low. So I think there will be great tension in the supply-demand equation over the next several years, and I think there will be very strong prices for a sustainable level. So I'm very bullish on lithium, and I'm very bullish on Piedmont, just given our unique location. We have the only conventional lithium project in the United States. The U.S. is a major economic market. Obviously, it's the number 2 car market in the world. Most of the cars in the U.S. are made in the southeast U.S. where we're located. So we think we can have a very big, very low cost and very strategic operation. And I'm looking forward to that all being reflected in the share price increasingly over time.
And Keith, there's a lot going on with Piedmont this year. Which would you identify as being the key and major catalyst for investors to look out for in 2019?
Yeah, Yeah, it is a big year for us, culminating at the end of the year, we hope, with a construction decision. So along the way, there'll be a lot of news flow on a regular basis. Of the major catalysts, I think the first will probably be an updated mineral resource in June timeframe, based on the current drill campaign. We're going to have a cutoff date of April 30th for that campaign, but based on that drilling, we're hopeful to have a significantly larger resource announced in June. At the same time, we're doing a lot of pre-feasibility level metallurgy work up in Canada with SGS Lakefield. That work is ongoing. We expect to have announcements about the outcomes of that along the way, but final outcome in terms of our proposed flow sheet by late June, early July. And then behind those two things, in the middle of July to the end of July, we'll have an updated scoping study. So this will be at a PSF engineering level, PFS level network, updated resources. We will not have done the infill drilling to declare reserves. That'll happen in the second half of the year. So we're calling this an updated scoping study, not a pre-feasibility study, but much of the work will be done at that level. And then the second half of the year, the two most important things will be, number one, the permitting process, which we're actively engaged in now. It's going quite well. We believe we're on track to be permitted this year. So there may be announcements along the way, but certainly toward the end of the year, we hope to be green-lighted on the project. And while that's going on, we'll be doing all the infill drilling and feasibility level engineering in the second half of the year so that we'll be in a position to really have a shovel-ready project by the end of the year. So it'll be an exciting year. There'll be announcements along the way in many areas. And if 9 months from now or 12 months from now we have a larger, higher NPV beyond even our current level, shovel-ready permitted project in North Carolina, we think that will have significantly greater value than our current stock price reflects.
And, Piedmont is an American-based company with a dual listing. Are you looking to promote your Nasdaq listing more?
We are. Again, when I was a banker, I spent a lot of time with international companies, bringing them to the U.S. And it was, I had a good experience generally with the right company, putting in the requisite amount of time on the ground in the U.S. with U.S. investors, which is quite easy for us because we all live here. It's harder for international-based folks. You tend to find liquidity in the U.S. can grow very significantly and be an important part of the overall equation. So for most precious metals companies in Canada, say, who are listed in the U.S., the majority of their stock trading actually happens in Canada. But there's no cannibalization. Sorry, it happens in the U.S., but there's no cannibalization of what happens in Canada. So in our case, we would hope to continue to have robust trading in Australia while building a very deep trading book here in the U.S., more significant, and group of investors here in the U.S., probably more significant than Australia. We're currently trading about $150,000 a day of total volume between the two markets. A little over half of that is currently in the U.S. We have a very active marketing calendar for this year with a number of different groups helping us with that. And we're really focused on getting the word out. I think that will be that can make a real difference to the valuation over time.
In Lithium-ion Rocks, Lithium-ion Bull, and through our respective LinkedIn and Twitter posts, Rodney and I may share with our audience some rationale for a stock for which we have conviction, to own or not to own. If you agree or disagree with and act on or against the rationale of anything said or written in this or any other Lithium-ion Rocks or Lithium-ion Bull, that's your free choice. But to be clear, what you are listening to or reading is not investment advice and may not be unbiased. It should not be construed as an investment recommendation to buy or sell any security. Rodney and I are not registered investment advisors nor broker-dealers. Please visit libull.com for further disclaimers.